Hello and welcome to FinTech Impact. I'm your host, Jason Pereira. Today on the show, I have Daniel Yoo of FinMate AI. FinMate AI is a advisor meeting notation software that's hoping to take its AI capabilities well beyond just that. And with that, here's my interview with Daniel.
Thanks for having me on.
So Daniel Yoo of FinMate AI. Tell us about FinMate.
Yeah, so we got started late 22 as a corporation. We launched our note taker designed for advisors back in May of 23 before the entire niche industry got absolutely flooded. The
Just a few
background,
of you guys out there, but we'll get into
yeah, back then we were the only ones focusing solely on the advisor marketplace. And where that came from was I've been an advisor for a while. Used to work for TD Ameritrade as a senior advisor for them, managed a good 800 mil for clients. Did that till Schwab did their buyout of TD. Lasted about a year post official buyout and then decided to leave. I'd been doing a master's program at Hopkins at the time for applied economics using machine learning AI to do price prediction modeling. My thesis advisor was a guy from FINRA who encouraged me to put my licenses under the new maintaining qualifications program and try something else. And so I decided to go into tech. And one of my biggest frustrations as an advisor was the large volume of note taking I had to do. TD was a pretty high volume shop. And so the amount of notes that I had to do was a lot. And so I figured there's a gap in the market. I knew that there were the generic note takers out there at the time as well. I felt that the outputs were not good enough for regulatory CRM record keeping. And so wanted to make something specifically for the advisor space. And that's basically how I got started.
Okay, so let's dive into that first statement you said there. Feeling it wasn't quite there for the regulatory standpoint. Where did you feel the deficiencies were and how did you go about fixing them?
Yeah, good questions. My first encounter with AI note takers in general was when I was working for a different startup post TD, and I was trying to build out our marketing piece. And so I was on calls with Snapchat and Reddit, some of these other ad providers. And I noticed they had a note taker. And so obviously I asked them for the copy of the notes post. They're very light on specifics. And it was more along the lines of, oh, we talked about this or we talked about that. And it never got into the specifics of what was discussed, what the needs were. And so it was in a very elementary space, even at that time in early 23, late 22. And so we wanted to make sure that the output was capturing kind of the essentials, financial details, things that needed to be done, things like that for the advisor space.
Okay. So, of course, simply saying we discussed the fact that they were changing jobs is not sufficient from a KYC standpoint, effectively, right? So, end of the day, it doesn't matter. It's a thanks, but no thanks. Like we actually need specifics in this industry. So easy to see where that was the issue. All right. So, talk to me about the initial implementation and basically there's much competition. How was your initial, and I want you to get into further detail about where you went afterwards, but initially, how did you feel? What did you target for differentiation? How did you stand out?
Are you asking like after everyone else came out as well, or like
Well,
before?
after initially when you came to market, your value
Yeah.
proposition was notation, but you moved a little bit beyond that pretty quickly. Talk about that, and let's get into basically what you did after the competition started popping up one a week.
Yeah, sounds good. So the initial implementation was we want the notes to be specific, right? And so we created specific templates based on my experiences as an advisor. After an introductory meeting with a client, this is the notes I would want as an advisor. After a discovery meeting, here's what I need to be able to do financial planning afterwards. After an annual review meeting, this is what I need for the regulators, right? For record keeping. And so we created custom templates out of the box. Generally, advisors are not tech savvy. And so we wanted to make something that was pretty out of the box, easy to use, straightforward. And so people aren't monkeying around with like prompting. And that was the initial kind of differentiator. And then quickly it became, okay, we need to embed ourselves within the advisor workflow. And so how do we make tools to make things easier for this new tool to be implemented within how advisors are running their business already? So a lot of it had to do with how do we get the paraplanners and how do we get the assistants onboarded and helping out with the advisors? How do we get the information into their core systems, things like that? And it just became a rat race. And I think every time somebody makes one innovation, it quickly gets caught up on because that's just the nature of the market currently. And yeah.
I remember getting to a conversation with one of the founders of one of these companies, and it's like, "Oh, we do this, that, and the other thing." I'm like, "Yeah, so does everybody else." And if they haven't, they're going to catch up just as quick because as fast as you move, they can move too. Because frankly, a lot of this is being supported by vibe coding at this point, which is getting you your first implementation pretty damn quickly.
It is, yeah.
Yeah, everybody can copy everybody pretty quickly. How do you plan on becoming valuable to the advisor and differentiating yourself long run versus the other ones that exist? Because let's also call it out. Right now, the friction that exists between moving platforms is pretty minimal.
Completely agreed. Friction is very minimal. I still think that note takers are not going to be like a core, right? When I think of core softwares for the advisor, it's generally CRM and then planning software. If you're not one of those two, generally I think you're pretty fungible. And so for us at least, we're thinking of it in the long term, long game, right? We're going to have to evolve. Everyone's going to need to start evolving beyond just a note taker because that field is now pretty much a commodity.
But I tell every new note taker, what are you going to be when you grow up?
And
Like,
so
that's all there is.
exactly. And it's very much becoming, we're talking about it as like Gold Rush and Levi's situation, where the people that are really making the money are the people providing the ground level models. Whereas I think everyone trying to build on top of that to gain some value, some alpha, are eventually just shops that pay these foundational models. For us, it has to be a lot more custom implementation. I think the real differentiator is going to have to end up being how can we make this easy as possible for the advisor company to have access to more complicated AI tooling. I don't think it'll be as scalable as people once thought.
We're already hitting
But-
bottlenecks on that. This might be news to many people hearing it on this podcast, but anyone who's in the AI space is already understanding that. Just starting to top out pretty quick.
Oh yeah, because anything that's a pure platform play is going to be immediately copied. Like you mentioned with vibe
Correct.
coding, with all the layoffs happening in the tech industry, there's a lot of software engineers that need to do stuff. And so there's a lot of manpower behind actually coding. And so any kind of platform I think will be copied immediately. I think it will be on, can we make this as easy as possible for the end advisor to use, whatever kind of the AI or technical implementation or whatever tooling is. I think the biggest question I'm getting right now from my existing users even is, hey, Daniel, there's 1,000 of these AI tools coming out every day, right? It's not just in the note-taking space. It's in a bunch of other separate little niche verticals. And I'm sure you're seeing that plenty. And the question I'm getting is, hey, like, Daniel, I'm an advisor. I'm not a tech guy. What do I do with AI? Like, there's just too much. And so I think, like you mentioned, that custom implementation or that kind of hand-holding service is really going to be the differentiator. And that just will not be as scalable as a traditional platform SaaS play.
No, I think that's the thing is that everybody thought this is great. We're going to create a scalable software, but
Yeah.
in a scalable software, like short of figuring out, like I do believe there are moats to be built. I do believe that there are moats in the realm of frictions that make it hard to, right now, if you leave your current provider, all that data is basically being pushed to the CRM anyway. So frankly, like it's not going to take long for your new note taker to catch up to your old note taker, if at all. Like it's going to be pretty quick. So
Yes.
then the question becomes, if that's the case, then you are effectively a commodity, can be switched in or out based on preference. Fine. How does one in the AI space, and again, this is cute, you do notes, it's a commodity. How does one basically further entrench themselves in the lives of the advisor in a way that basically is going to be differentiated and create friction to leave? And the reality is, while you're all copying each other right now, you're all copying each other on a core functionality, right? Around meaning note takers. There's other functionality in our lives that I think you're all going to depart and head in different directions in because you're going to have to, right?
Yep.
And otherwise, what we're talking about is previously, which is like, you're not going to be software plays. You're going to be service plays. And that's a
Yeah.
really different market. I think it's also going to, frankly, like some of the valuations we've seen on some of these raises.
Yeah.
We're challenged if we're looking at service companies versus software companies.
Yeah. The reason we're more okay with growing slowly is because we haven't done any raises. And so we don't have necessarily valuations that we need to hit. And you're right. I've seen these valuations. I know what percentage these companies have sold for how much money, and it's staggering. They're going to have a hard time hitting those valuations if they move into a service play. And so I think they're going to have to learn or figure out another platform play. Yeah.
And I honestly think that advisors' lack of sophistication is one of the things they got going for themselves right now. It's like basically people will satisfice, right? They basically get to a point where it's like, oh, I'll get this note taker or whatever, but then, and that note taker will continue to add functionality. But then sooner or later, other note takers stop becoming note takers. Note taker becomes, we're already seeing other softwares challenge that space because it is a mortal threat to them, right?
Yeah.
Wealthbox came out with their own note taker, rightly so, because if you're literally sitting in the room
Yeah.
where the data is being originated, guess what? You just leapfrogged the point of access. And if you let someone do that to you, you're in danger of getting completely disaggregated.
Yeah. Bucks played it pretty well. At the end of last year, I think they gathered a bunch of the note taker players into a big like AI conference thing and then
Drop
announced
the bomb
theirs
on 'em.
right after. Yeah,
Yeah.
I thought that was pretty clever.
Let's face it, this is the deceptive thing is that everybody's like, "Oh, great, this is a new technology. We can get up and running, no problem." So else.
Oh yeah,
So,
it's a commodity. I describe it as selling potatoes now.
and as I
It
said to
used
one
to
of your
be,
yeah, as I said to one of your competitors who tried to convince me of otherwise based on his feature set, and I was like, "That's nice. You got a feature set. They got a feature set. I'm gonna opt
yep,
into the one that I want." And I'm gonna quote Bezos on this: "The only advantage you have is speed, so you better start running hard." But that's enough speed to get out in front, to get a market, to then figure out how the heck you're gonna hold on to that market, because we have not basically written the final chapter of this book, that's for
no.
sure.
And the issue with trying to run fast as a startup, like as some of the newcomers have tried to do with the incredible raises, is some of the more established players like Wealthbox are now seeing, okay, this is a lucrative industry, or this is going to protect our core business. And then once Wealthbox and folks like that start hopping into the fray, there's a limit to how fast you can run as a newcomer with limited resources compared to some of the older players. Yeah, it'll be a fun year and a half coming up.
Yeah, it's like I get it. There's something to be said for having the land grab and doing well in that regard. But I really, I think I said this when we first started. I'm not sure if I said on this podcast yet. The longer I stare at this space, the less clear the future becomes.
I'm with you. I mean,
Yeah, and you're in it. You're living it on a daily
yeah,
basis.
yeah. And I know you know this because staring at this for a long time as well. I think advisors are have let's say an embarrassment of riches. There's just so much resources being poured into this right now, and so I think there's a glut of all these tools. It's gonna get pared down because it's just not a sustainable thing. The incredible
No,
amounts of money flooding into this
I think
space
there were
are
16 meeting notation softwares as of this time last year, if I remember correctly.
yeah,
And you're all reselling a core function of a Gen AI tool. It's
correct.
not the
Yeah,
overlay, the amount of work over top of it. It's almost like Wizard of Oz, right? It's pay no attention, man behind the curtain. You're all using the same
right.
models in the end. Come on.
Yeah,
So the reality is, but again, I still think that to reiterate, there's an opportunity set there to capture people with a utility that
mhm,
is commoditizable, but then at the
yep,
same time, you turn around and you figure out ways to layer on value. The issue is how do you layer on value in such a manner that the next one comes out and is $20 cheaper per month, and my credit card swipe isn't the only thing between me onboarding or offboarding. Like it's like right now, I've tried 3 or 4 since this all came out. I'm advising one in Focal, as has been discussed before. The friction between moving them between all of them was pretty immaterial. Now there's
yep,
additional functionality now before Focal, they weren't advisor specific. So there's additional functionality that's advisor specific that can be copied in the industry right now. We're working on some stuff I can't get into, but otherwise it's going to be really interesting to see what everybody does to try to gain some form of friction that
yeah,
is not the kind of friction that is the kind that's going to make advisors upset, right? Like friction
right,
would be like,
right.
we're just going to keep the notes to ourselves, which you would never be able to succeed in this space if you did that. But that's the wrong kind of friction, right? The right kind of
Right,
friction
right.
is, oh man, this has provided such a boost to my workflow that it basically, I can't move. And then this goes back to what we were talking about earlier. The problem is workflow is incredibly custom,
Yeah,
scalable.
yep.
So it's going to be an odd and interesting challenge.
Yeah. To your point, I think Kits has had that article a while ago talking about like when Wealthbox were, I guess, like right before Wealthbox announced their note taker. I think Kits has wrote an article about the relationship between CRMs and note takers. Feel like he had some behind the scenes knowledge given the timing of publishing. That is one direction potentially I think some people could try to do is to try to muscle in on the CRM space. I have come out, I think I've been pretty public that I have no interest in doing that before. I could see a world where some people will attempt that as an all-in-one platform solution, but
I don't know. It calls into question what the future of CRMs are going to be also given. It's funny, my friend John O'Connell at Oasis Group basically on stage said, oh yeah, by the way, CRMs, your day's over. Because at the end of the day, AI can do a pretty decent job of shuttling this data around where it needs to be. And I said, you're right. But at the same time, what's going to be funny is that like at the end of the day, you basically said, if you're just a referential database, which is all CRM really is, your heyday's over. The complexity's gone. I'm like, yeah, I get it. But the funny thing is that the AI is probably just going to come up with its own referential database. We're not really reinventing the wheel here. I also think the fact that it's going to come up with something that looks just like the old thing is also going to be the thing that keeps us on the old thing longer.
yeah.
So it's such a weird and challenging time right now.
Yeah, I don't think CRMs are over. I think CRMs just need to build more of an AI front end because I think the biggest friction for CRMs has been the advisor interfacing with the CRM. And that's
Well, the
always been
human's always
very
been the
clunky.
problem.
Yep.
No advisor loves their CRM because at the end of the day, the CRM represents work. right? It doesn't auto-magically put all the information where it needs to be. It doesn't look exactly the way I want it.
Right.
It doesn't deal with my specific use case of how I need to know what colored nail polish the dog that client has wears, because that's the thing I recorded in my CRM. Like, it just doesn't deal with all those idiosyncrasies. So the reality is that it's messy because we're messy, right?
Yeah.
Everyone does things differently. And this goes back to when people come to me saying, we're going to solve the onboarding problem with CRMs, with AI. I'm like, no, you're not. Two companies can't even agree on what risk metrics mean. The number of ways they take in data, the way people put in data differently is enormous. If it was just a bunch of rules, we would have figured out the rules a long time ago.
Yeah. I think the benefit that these incumbents players would have is just like this compliance folks who are more comfortable with it. But I do see like a lot of the smaller folks moving over to tech-centric platforms like ClickUp Monday, things like that.
Compliance folks are more, thank you for explaining Microsoft's entire business model.
Yeah. That's what it is. It's the compliance folks that are like, we don't want to move because we know what's going on here.
And my response is always, oh, you think you can do everything? Let me ask you something. What does Microsoft build that's world-class? And everybody goes dead silent. And I basically say, maybe they say Excel. I'm like, yeah, okay, the thing that people use 5% of the functionality of. Okay, great. But they also can get away with what is equivalent to a technological hate crime by launching Teams upon the universe and not being held to account. I despise Teams with every fiber of my being. Ironically, we're recording this shortly after Microsoft announced a return to work policy because virtual is not good enough. And so imagine being on the Teams running Teams that basically has made it so horrible that they want to now go back to work. That's just the icing on the cake of the Teams story. So the point being is that at the end of the day, when you're a startup, you can't afford to be mediocre. You have to be really good at one thing at least. Too often, I guess this is a moral hazard issue. Gen AI has made things too easy to move forward. And therefore, we're going to get a lot of really silly things moving forward, thinking they can do everything.
Part of the issue is just the funders too, right? If you take a look at some of the recent like YC cohorts, it's like 70, 80% bullshit AI.
But here's the thing. It's like YC is more like the badge of honor. Don't get me wrong. You can learn a lot from it and all this other stuff. And they've got a good track record and everything else. But their hit rate is meant to be terrible. And they throw a lot of money at a lot of garbage a lot of the time. Yeah. So just because I love when companies like, we just graduated YC. I'm like, congratulations on graduating YC. Tell me if you did anything useful. And they're just like, whoa, people have never said that to us. Yeah, but, have you looked at the failure rate? It's not a bad thing. That stems the brakes of the industry.
Yeah. And a lot of garbage is getting funded, which is why we're getting a lot of garbage coming out. And that's just how the industry works.
Yeah. That's not get started on that too long. That said, realism, let me call it not doom and gloom, but the realism we've discussed in the AI world.
Yeah.
What are your thoughts specifically on moving forward?
Where are we in 6 months?
Well, so one of the things I always tell people, like when they're like, what note taker should I basically go with? And I said, frankly, right now, unless you can see a differentiated offering specific to yours, and because you're asking me this, if you've looked at a bunch, it means you haven't. What you need to do is you need to understand what that company's near-term roadmap looks like, not long-term, because long-term is just a myth. 6 months to 12 months out, what is it they think they're going to have done in the next 6 months? Because that should be pretty high certainty. And 12 months is relatively high certainty. So what does that look like? And does that match up with what you're trying to accomplish or your current service offering or add value to what you're doing? When I ask them why that company, they're like, their roadmap lined up with what we were hoping, what we were looking for more than anything else. Okay, great. You figured it out. That's exactly how it should be. So talk to me about putting you on the gun. What does your 6 to 12 month roadmap look like that you're able to share with me, of course, or even broadly, as to what direction you're moving and how you hope to win business?
Yeah. I think the direction we're going to move in is we're just going to play into the fact that we haven't fundraised and we don't have these hyper scalable goals we need to hit. And so we're going more hybrid model of service plus platform. We're just going to make it as easy as possible for our customers because we're going to hyper customize things to their needs. And we're going to be high on service.
There you go. So you are more of a AI consultancy play than you are an AI product play. And that is a completely different dynamic, because a consultancy play that goes in and embeds more pieces of function. Like when I hear these companies come to me and say, okay, we're going to embed yourself in all these workflows. It's like, these workflows aren't standard. How do you think that's going to work? So if we're going to steer into the non-scalability, which means we're not a software company in the end. But then again, like, frankly, how many of them really are software companies if they're using generic models in the first place, right? Like, that's exactly right. And look, I'm not criticizing anyone. Make a great business out of it. Knock yourself out. But there's also the very ever-present reality of this, do I believe that there will be a handful of notation companies that do win this space and manage to create value propositions beyond what is the simple standard of notation? Like, 100%. Do I know what that future looks like? No. Do working with one of them on some of the things we think will basically be differentiators that will get us what we need to become a differentiated offering in the industry?
Yeah.
Yes, I am.
Yeah.
But do I think 16 companies are going to find 16 ways to provide 16
No.
different, like, really defendable moats? No, I don't.
And people are going to come in after with bigger wallets because there's going to be entrenched players that are going to come out.
Yeah, I got an interesting story about that one. But no, good one. I respect all the people involved,
Yeah.
but I was ancillary to that story of it, is what it is.
Oh, interesting. I was
all right.
friends with the guy that got bought out by them, like one of the YC grads, right?
All right. So bottom line is you're leaning more into service. I think you're doing a smart thing given you're not
Yeah.
you haven't been given a giant chest of money to burn on customer acquisition costs, which is in itself a strategy.
It's a great strategy. It's worked for Silicon Valley for years and years and years.
But
It's
it
a
ain't
valid
gonna work for
strategy.
16 different companies.
Yes, correct. Yeah.
Okay.
I still think we're a hybrid because we're doing the building and implementation. And what we're probably going to end up doing is we're going to take the best in class of what we see as patterns across and then package it as like a self-onboarding thing. But I think at the core of it, advisors are relationship driven, I think. And so I think we can carve out a good, solid business from having good, solid customers that like our servicing.
I would agree. All right. Let's end on the 3 questions that I always end on a positive note. And it's
Sure.
the first one is, if you had one wish for something you can change in your company or the industry as a whole, what would it be?
One wish I can change in my company or industry.
For the industry as a whole, what would it be?
Very good question. As things are changing very rapidly, it's like I can't really think of an entrenched problem that I want changed. But I think in general, I think if people are more honest about what's happening, I think a lot of AI founders try to pretend that they're more than what they are. But I think just being realistic and honest about what's actually happening is beneficial for everyone involved.
Fair enough.
Yeah.
Just get more realistic conversations about, yes, I would say more realistic conversations from all AI founders is something I would very much like to see also. Second question for you is basically, what's been the biggest challenge in the company to where it is today?
Biggest challenge. I didn't expect that this niche would get flooded as quickly as it did, to be honest with you. I thought, oh, it's like an advisor space. I've been an advisor for most of my career before into tech. So it's my little corner of the woods. And I did not realize how many tech folks would flood into the space. That's been a challenge, just learning to accept that, oh, actually, this is not such like a small corner. It's like a piece of ground that I think a lot of people are actually willing to fight for.
And just remember,
that's been a
the
challenge.
easier it is for you to get into a space, the easier it is for everybody else to follow you. This is a
Yeah.
valuable lesson in future AI implementations, I think.
Yeah.
And the last question I have for you is, what keeps on getting you out of bed in the morning to keep on fighting the good fight that is running your own business?
Yeah, I think it's the enjoyment of being able to produce something that I can change what I produce. I think my biggest frustration as an advisor has been my products are pretty stale and same. And I had very little say in what I could produce as a product for my advisory clients. And so I'm enjoying the fact that I can pivot and change direction in providing the products and services to my clients now than when I was an advisor.
Excellent. Thank you very much for taking the time, Daniel. Very much appreciated. If anyone's looking for what is effectively going to be more of a company that's going to dig into your problems more than just sell you a solution, check out FinMate AI.
Yes, appreciate it.
So that was this week's episode of FinTech Impact. Hope you enjoyed that. And as always, if you enjoyed this podcast, please review on Apple Podcasts, SoundCloud, Spotify, or is it your podcast? Until next time, take care.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at jasonpereira.ca.